it doesn't change your right to keep assets, reinvest. You can even get credit, have debts, finance things. It doesn't matter. The important thing to remember is that whichever way you go, you're still going to have to declare your South African income to SARS.
Moving to the USA as an employed individual, having still rental property in South Africa that will remain here, obviously be rented out, and then potentially also have business interests still in South Africa. So if you need to discuss that with the individual, with the client, what would you advise him to do? Financial, obviously, I assume financial immigration would be the route to go. But what does that person need to look out for?
Well, the first question immediately that my mind goes to is he moving with a permanent intent? You know, that immediately qualifies or disqualifies him for financial immigration. If he is, let's say, then absolutely, even if there's other options that also work that he might qualify for, that's probably the best in terms of if you have that permanent intent, because it's the once off and it's the covers you worldwide. So at least no matter where you move, no matter what changes in our legislation, you're covered, okay? Now, say he wasn't going abroad with a permanent intent, and then I'd say to him, okay, well, you're an employee, so that still qualifies you under Section 10102 to perhaps claim the foreign income exemption. Then is your gross income, so before taxes, including all bonuses, benefits, all of that, is your gross income above the R1,250,000 threshold per annum? If it is, you can exempt up to that much. If it's below, wonderful, it's fully exempt, okay? If it is above that, then I'd say, okay, then let's consider go to the DTA option. The US absolutely has a DTA with South Africa, and that's where we would fully exempt all foreign income, not just employment. So everything from the states that he earned, employment, personal, whatever. If he had another rental in the States, he could still exempt it fully. So there's no cap on that one. So think of it this way, DTA and financial immigration, no cap on the foreign income you can exempt. Section 10102, the foreign income exemption, the remaining tax resident, there is a cap. Okay. So again, depends on what it qualifies for. But the other important things you mentioned there are that he's going to keep a rental property in South Africa and a business interest, which absolutely, whichever route he goes with, he's allowed to. Okay, you don't cutting ties with South Africa, whichever way you choose, be it once off seizing your tax residency annually or remaining tax resident. It doesn't change your right to keep assets, reinvest. You can even get credit, have debts, finance things. It doesn't matter. The important thing to remember is that whichever way you go, you're still going to have to declare your South African income to SARS. So he's going to have to, that rental income and any business interest, he's going to still have to declare it to SARS. And then, you know, he can claim the normal deductions and all these things.
So obviously the rental property, that once he's financially immigrated, the rental property is an easy solution or easy answer. It's, I receive rental income, I need to declare my South African income tax return.
Correct.
Business interest. So if you have business interest in South Africa, obviously when you receive a director's remuneration in South Africa, you need to declare the South African tax return. But
hi, Jasper Basson here. I just wanted to remind you about the Daily Entrepreneur Tips series. It's a business growth series for entrepreneurs and contains financial information and also information to grow you as a person and your business, because we will never grow our business any higher than we grow ourselves. So click on the link below and I will send you daily information to grow you as a person and your business, and it's for 365 days of the year.
So with that, it gets a little bit more complex when you bring a company in. So the first thing we must check is he 100% shareholder? Is he 25%, 50% shareholder? Because that might affect the tax status of the company as well. But nonetheless, depends on how he's drawing. Is he drawing dividends? Is he drawing a salary? How is he getting paid through it? Okay, there is a withholding tax on dividends for non-tax residents in South Africa. But I think the main thing to consider in both of these remaining South African assets, the business and the property, is that it's going to be taxed and treated in South Africa as normal. But keep in mind that you need to also consult with someone in your new tax jurisdiction, because if you're a tax resident, or in the state's case, you're already, it's a whole other level with federal and state tax there, but you might also be liable to declare any South African income to them as well. And then depending on, claim any credits of what you've paid in South Africa, etc.
So based on that South African income, so would it be possible for South African company then to rather, for the director, let's say there's more than one shareholder, so it's more than one partner, to rather start a new company in the US, obviously with their tax consultants, and rather do something like a consulting fee between the South African company and the US company. So it makes, obviously, you transfer the tax obligation from South Africa to the US. Will that be possible?
Absolutely, and I'll actually let Tom dive into this a little bit deeper, but again, case dependent. I know I keep saying that, but it's very important to remember.
Yeah, thanks, Victoria. You've actually hit onto what I've often joked is a lawyer's favorite answer. It depends. And it very much does. If we take a cookie cutter example where it's a simple consulting business, perhaps it's just the two of them with no employees, then maybe that is something that you consider. I mean, a partnership, for example, is a fiscally transparent entity, but it creates a lot of confusion from a double filing perspective, let's say the US and in South Africa, when you need to, as a fiscally transparent entity and as a partner, file and declare your taxes. As an employee of a company, or let's say an executive director, it's a similarly difficult thing. Technically, he can live in the States and file his taxes there, declare his director's rem or his employment income. Company can keep filing in South Africa, but there is that risk of creating a taxable presence in both countries on the part of the company, firstly, and secondly, it's just not best practice. If your worldwide obligation becomes the US, for example, then you're going to want to be on a US payroll, even if you're just working in there for a significant amount of time. So your suggestion in that regard, perhaps opening a separate company in the US, having an SLA or service level agreement between the two companies, or having perhaps a group of companies in this context might be a useful answer. But it very, very much depends on what the business is, where the business is, what size the business is, how much it profits, and at least a handful of other variable factors before you can put together a strategy. One thing we would say is it's better to have that strategy in place before you find yourself in the other country. That's for sure.
To you, give a comment if there's anything that you want to add to this video. I would really appreciate that as well. And obviously, if you like my channel and follow us. Enjoy your day, and I'll speak to you soon. Bye-bye.